All right, guys. So I just wanted to have a quick discussion with you guys about this. This is a question I'm already seeing pop up quite a bit right now, and we discussed this very briefly yesterday when we were talking about what your journal entries look like in Cengage. And there was a reminder, if you'll remember, at the bottom of that slide that said, "Hey, when you do something that impacts your net income, your revenue, your expenses, you also have to show that impact on your equity. So you've got to show that on your fundamental accounting equation portion, right? Um, the E portion of that equation. You've got to show that. Essentially, what it's saying is you need to show that impact on your balance sheet. So if you recall, when we talked about it, there's a reason we run these reports, these financial statements in a certain order, right? So we start with the income statement, okay? You start with your income statement, okay? That's where you're going to get your net income. Then you go to your retained earnings statement, right? The net income flows there to the retained earnings. You get your ending retained earnings number, right? And then that goes to the balance sheet. Okay, so you can see that any impact that you have here, whether it's up or down, eventually will flow all the way to the balance sheet, right? Okay, hopefully that makes a little bit of sense, okay? Um, so essentially what we're seeing is, let's say instances, for example, lines 11 and 12, the June 5th journal entry that you've got here. You've got, we'll just walk through this journal entry real quickly. Let me figure out how to erase all this garbage. Should be a way to clear this. Sorry, bear with me. I'm um, just now learning to use this whiteboard here for you guys. This is a pain in the butt. Sorry. Feel free to laugh. Okay, so let's look at this June 5th journal entry on lines 11 and 12 of the general journal here. Okay, so I'm assuming what it says is it's something about you've sold something on account to a customer, or you've provided a service to a customer. So you've got, and um, we'll start with our T accounts, right? We've got AR, and the other account we're going to hit is service revenue. Okay, so service rev. Okay, so AR, we know we're going to debit because that's an asset account, right? And the asset account is on that left side of the equation. So we're going to debit that for $9,500. Okay, 9.5. We're going to credit revenue for 9.5. Okay, so now we can write out our journal entry. We know AR for 9.5. We know rev for 9.5, right? So we know this is our debit. We know this is our credit, okay? So when we're looking at the impact of this, okay, when we want to know the impact of this, we have to follow it through since this is an impact on your revenue right here. This is an increase to revenue. We know that impacts net income, right? So it makes net income go up. Okay. So we know that net income is just part of that retained earnings number, right? So that makes retained earnings go up, which in turn makes your stockholders' equity increase. So that's what some of you guys are missing on these journal entries. Remember, okay? Remember that when you impact net income or one of the components of net income, you also have to let that follow through all the way to your balance sheet account, okay? Because that in reality is what is going to happen, right? Your net income goes up, that's on your income statement. That's going to flow through to your retained earnings statement. Your retained earnings go up because your net income went up. That's going to increase your ending retained earnings, which follows all the way through to your balance statement, to your balance sheet, which means that your equity is going to increase, right? So you need to show that in your homework. That's what that note was all about yesterday. Maybe I didn't do a great job of explaining that, but hopefully if some of you watch this video, it'll head off some more questions and you guys can finish that homework comfortably, because many of you are finishing it and then you're getting like a 98% and you're not sure why. This is why. This right here is why. You need to show those impacts on your balance sheet accounts, on your assets, liabilities, or equity, particularly your equity, when you impact one of these net income numbers, that revenue or that expense, right? All right, so if you do have any more questions, don't hesitate to contact me. I am happy to answer those. Thanks.